all other commodities were down significantly, gold eked out a small gain because people did realize that it does represent a store of value in this period of fiat money, with central banks creating credit like we've never seen before around the world. So that's why we far prefer gold and silver, as store of value. However, in the Prudent Bear Fund, we're also investing in resource areas because we do feel like they represent a good hedge.
For the silver bulls out there, David, let me just ask you about that for just a minute and focus on that. As you do have a decline in global industrial production, you can obviously see a fall off in industrial demand in terms of silver, but that's a very unique market because it is a byproduct of other base metals mining, as you said. And so if you're having a decline in those or the lack of profitability to cultivate those as people are shutting those mines down, you see a subsequent shut off of the silver supply in the system as well. And as people begin to question not only the dollar, but maybe paper currencies globally, isn't it the reality that if we had, say, a billion ounces of silver, not all of it for sale, most of it not, but in above ground supplies globally on a per capita basis in modern history, that's probably one of the smallest levels because we consume this and through industry, as you know, so most of the silver has been consumed and lost forever. Doesn't that, if there's a billion ounces or so, doesn't that mean when you look at that today at 16 and change, let's call it 1680, high 16, 17 billion, we'll call it, as a $17 billion market of above ground silver, very little of that available for sale today. Isn't that a market that could just get manic as money begins to move into that in earnest?
Oh, it definitely can. And that's a very small notional value relative to the trillions of dollars of worthless paper money that's around. And gold and silver should do very, very, very well. But silver has done better than gold has over the last year. Silver represents a great place to put some money.
Let's close with U.S. bonds and interest rates, David. Where do you see those headed over the long term?
We see the bond doing very, very poorly, and we see interest rates rising. We're going to have to attract capital, and we're going to have to do it through higher interest rates. And it still stupefies me that bonds have done as well as they have over the last year or so with this massive amount of credit issuance that we have today. However, it's just a matter of when, not if, that there's a funding crisis where the long bond is going to decline in value. Essentially what foreigners have done over the last 9 months or so is they have showed up at Treasury auctions, but they've essentially traded in agency securities in order to have shorter maturity Treasury obligations. And therefore, they've improved their position over the last few months. However, now they are more liquid than they've been before, and they're now owning Treasury securities instead of as many agency securities, and therefore they're set up to sell those Treasury securities down the road, or when they mature, not re-up again, and then that's when a funding crisis is coming. So that's created a little bit of positive optimism in terms of the Treasury auctions being decent, as well as the quantitative easing where the Fed has stepped up and bought these securities in order to keep the market going. That's going to end, in our opinion, and it's going to be problematic when it does.
I know I told you that was the last question, but just very quickly here, is it too late, in your opinion, for the United States to fix these problems if we had the right government in place and they began to make the proper changes, or you had a Ron Paul-led government that was very conservative that began to orchestrate changes? Is it too late for us, or what are your thoughts on that?
There is not a quick fix, Eric. We're going to have to make the changes in steps, and it's not too late. We're going to have to make steps at the margin. We're going to have to embrace capitalist principles. We're going to have to change economic thinking in this country away from the Keynesian theory to more of an Austrian school theory. There's great theory out there from Ludwig von Mises, Murray Rothbard, Hayek, Hyman Minsky, etc. We've gone through these problems before. We need to get away from this principle that all hold hands and buy a new SUV and go out and spend money and stimulate this economy. We need to adjust for the fact that we have too much luxury consumption infrastructure, and we're going to have to get back to a system of production and not consumer. I'd like to leave the listener with this final thought. Why is it that we call the American that buys and works a consumer? We need to start calling ourselves producers rather than consumer. A consumer that doesn't work is a deadbeat. Unfortunately, we have too many people that consume first and produce second rather than produce first and consume second. That's where we need to get to. We have to change the system. I'm still an optimist, but unfortunately, we're going to go through a lot of pain before we get to that level, and we're going to have to make right choices along the way that are going to be tough choices. Unfortunately, I don't think we possess the leadership right now to get there, but let's hope and pray that we get there.
David Tice, Federated Prudent Bear Fund. Thank you for joining us.
Enjoyed it, Eric. Thank you.
Thank you for joining us at KingWorldNews.com. Remember to tune in next week as Silver Wheaton just had a major news announcement this week with Barrick Gold. So the CEO, Peter Barrons, will be here to talk about that news. Part 2 of James Dines will be pre-released on Monday. We also have Bill Fleckenstein of Fleckenstein Capital, as well as Rand Paul, future Senator of Kentucky, son of Congressman Ron Paul. Also, remember to go to our Gold Plus page for exclusive weekly interviews with Ted Butler and Gatta, and to the business section for the exclusive weekly interviews with Barry Ritholtz, author of Bailout Nation.